Well, so tomorrow the Finance Minister, Dr. Kisiela Toforson, is expected in Parliament to present the budget for 2026. We're hearing the budget will be presented around 2 p.m. in the afternoon. Now, the upcoming 2026 budget is expected to be heavy on VAT rationalization, which we understand will lead to a cut in the COVID levy and all of that. So really, what are businesses expecting in the budget of 2026 to be read in Parliament tomorrow? We have the industry players to help us analyze what the expectations will be. But of course, as we do always when we're going to have budget, lead data analyst here at Joy News, Isaac Kofieje, will break down the issues for us before we even get into the issues. So, Kofi, let's look at what to expect in the 2026 budget. But do we start from, analyzing the 2025 budget before we even get into 2026?
I think it would be good to start from 2025, just to give more or less like a sort of like a mirror to what may happen in 2026. 2025 was the first budget of the current, Mahama administration. They are taking over power, and that was the first budget. They didn't know what was in the kitty for them. But now, about 10 months or 11 months down the line, they have been able to do their own actuarial studies, and they know the direction that they want to go. They introduce new policies like Gold Board Initiative, and I'm sure that they are aware how the Gold Board has become important to the health of the Ghanaian economy. And based on that, they are going to, plan ahead for 2026. They also know what has happened to the oil industry, the industry that everybody is saying that it is, declining. And in fact, that will also inform what will happen in 2026. But
even the energy ministry itself has alluded to that fact that there's some decline.
The data is everywhere. It's everywhere dense. Everybody can see how we are tanking in terms of production and revenue, how we are stuck with just exploration, and we've not been able to move some oil companies to, development. Right?
That is good for us, because I remember when we did a PM Express on asking the question about whether our oil sector was declining. I saw some people take on PM Express on Facebook questioning how we could say that. And I said, no, you're not really
looking at the data.
Exactly. Yeah. If you had the data, you would of course agree with the question.
Yeah.
That is the industry declining, So it's good the ministry itself today says that there's a decline, and we have to work at it.
Yeah, in fact, the data is there to confirm. And if you look at our targets for the year in terms of oil revenue, per what we are seeing so far, it's unlikely that we will even be able to get about 1 billion from oil revenue this year, because of what we are seeing on the global, perspective, and the fact that even production in our own space has been declining. And we all know what has happened, where Guyana is the new kid on the block. Everybody is running to Guyana. Cost of production is very low there relative to our space, where some of the investors are complaining about cost of production per barrel. Imagine, Kojo, you produce a barrel in Ghana for about $40 or $50 per barrel, and you are going to sell it on the international market. The current price is between 65 and 70. How are you going to make profit? And so that in itself is a big disadvantage, a disincentive for new investors who are hoping to get, investment opportunities in Ghana. The cost alone is a big burden. And we possibly can talk about the series of arbitrations that have gone on over the years. That in itself is also not making the country look very good or attractive. But the president says that, well, we are following America. Drill, baby, drill. We've opened our arms. If you want to come, we can give you favorable terms. And the president was very, very particular about it. I remember when he even took over office, the first people he spoke to were the people in the oil space, because he knows how important that space is as well. But beyond that, definitely one aspect or one space of our economy that will be heavy in terms of this year's budgets will be what this budget will mean to businesses and even individuals. And we are taking a cue from what is happening this year to what may happen next year. Already, the year started inflation a little above 20%. Now we are talking about 8.1% inflation. The exchange rate situation has improved relatively. And in fact, we are talking about $1 to a cedi around 10 cedi, 90 pesos. looking at the interbank rate. We've all seen how the economy has moved from being funded by, bonds, monies from bonds markets and T-bill rate to an economy now being funded by inflows from gold export. For the first time, we've been able to possibly nationalize the exportation of small-scale gold from the country. That in itself is also going to feature heavily in the 2026 budget. And then also, the country was able to find some revenue handle to cater for fuel purchases in terms of, power generation. We can all attest to the fact that power has been very stable since we introduced that 1 cedi additional levy on the export price of fuel. But this year's budget, the temperature will be a bit different because it will be heavy on something that the president and the finance minister promised before they took over, power. That is VAT, the value-added tax system, which is a big concern for businesses because many have said that the current VAT structure that we have as a country is draconian and it looks very complex. And in fact, the cascading effects attached to the current VAT structure means that the effective VAT rate is currently around somewhere 22%. The president says that in itself will need some form of rationalization. And they've been able to do that. They've done the work, and the the finance minister will be presenting that tomorrow. We'll find the details. But as we always do, we have our sources, and we have an idea of what is contained in the new VAT structure. But before that, you can see on the smart wall that one thing that is not performing really well as far as the 2025 budget is even concerned is the fact that revenue, what we budgeted to get this year, total revenue and grants, haven't been able to get to the level we wanted to get to. I think the drop is about 6%. If you compare what we projected versus the provisional outturn that we are getting, and majority is coming from tax revenue. Tax revenue in terms of projection versus provisional, outturn. The difference about 2.8 billion. Ghana cedis, about 3 billion Ghana cedis that we've not been able to realize, but it's still provisional at the moment. But what we know and can confirm is that based on the finance ministry's data, it looks like the tax revenue part of our entire revenue kitty hasn't really performed well this year. And we'll be trying to get answers. And then also, cedi appreciation is good. But once cedi is appreciating, you should know that that will also affect your revenue from the ports, right? And then you had the government that decided to take away two big tax handle. It took away the COVID-19, the e-levy, and then also took away the betting tax. That in itself would definitely have an impact on the revenue this year. But we understand that there's going to be an additional cut next year coming from VAT and a big promise to scrap the COVID-19 levy, the 1% COVID-19 levy. Let's try and understand the VAT structure and what we should be expecting tomorrow based on what our sources are telling us. So the new VAT structure that will be coming in, the rationalized one, our sources tells us that there will be no tax on tax component anymore, where the finance minister says that he doesn't understand why we should have three different VATs, where you have the standard rate, you have the flat rates, and then you have the other component.
Trading was largely
in levies. And the finance minister said that when they are done with this whole new rationalization, VAT, the two components that we usually will add to the base in terms of the calculation will no longer be there. So there will be no COVID-19 levy. It will go completely. The Get Fund levy will be detached, and as well as, the NHIL levy will also be detached. What we are also understanding that there will be no flat rate anymore, and we possibly could see a 0% VAT for mining companies who are hoping to do exploration in Ghana. We know we are doing that in the oil space, and we could replicate the same thing for mining companies. So tomorrow is going to be heavy on VAT, but definitely if government decides to do that, it means that they are letting go this revenue you see on the smarts or on the screens, 1.15 billion Ghana cedis in terms of first half revenues for COVID-19. The average is around 2.5 billion. So this whole VAT rationalization would also cost in terms of revenue. But government is saying that, well, we believe that compliance has been a big deal. So once we rationalize, we believe that compliance can help us fill the gap. And that is the direction that government is hoping to go in terms of how to close the gap as a result of the differences that will be created by the VAT rationalization. So, Kojo, tomorrow will be heavy on taxes, where we can confirm from what we are getting from our sources that the COVID-19 levy, which the government promised in their manifesto, will no longer be there. And that will mean that government will be foregoing some revenue of about 2.5 billion on average. That's the estimation this year. Government says that VAT will be restructured. There will be the flat rate. You will not have the three systems anymore. The threshold, we understand, is likely to be increased to about 750 Ghana cedis. And so what we can confirm is that VAT rationalization has been completed, and that will be presented tomorrow by the finance minister. And the government is saying that, well, they understand that this will create some gap in terms of revenue, but how they intend to close it is to make sure that the compliance that will come as a result of the effective VAT rate being reduced from 22% to about 20%, that can help close, the gap that will be created. But the big news is that if you decide to scrap COVID-19 levy, that's about 2.5 billion Ghana cedis that the government will be hoping to forgo again next year. This year, they've forgone the e-levy and the betting tax, which, of course, you saw in the data that we've seen that tax revenue, first half of the year, is short by some 2.8 billion Ghana cedis. Kojo.
Okay, so we need to find out how government can really make up for the 2.5 billion gap that will be created by the COVID-19 levy. Anyway, thank you very much. Let me bring you again to my guest, and we've been joined by Joseph Paddy. He is Director, Industrial Relations, Ghana Union of Traders Association. Guta, thank you very much, sir, for coming. I'm well, sir. I also have Dr. Mark Bedouabwaji, he's Chief Executive, Chamber of Commerce. Thank you, sir, for coming. Okay, and then we have one from the academia, Professor Isaac Body, Dean, Accounting and Finance, UPSA. Prof, good morning.
Good morning.
Thanks for coming. Let me start with the business community, because this Prof is also here. Everything that happens concerns all of us. Yeah. But I mean, if we're going to have some respite, it's going to come from the business people. Exactly. So let me start from you, Dr. Mark Bedouabwaji. For the Mark Bedouabwaji, for the business community, what is your topmost priority in this budget that will be read tomorrow?
Well, so for businesses, we operate in certain environments. And if the environment is conducive, that is where we become profitable and we can expand. So what we are asking for is a budget that will create that conducive environment for us. One area is the macroeconomic side, which of course we've seen certain level of improvement. We've seen inflation coming down. We've seen policy rates from 28 to 21.5. Of course, we still think that is very high, given that inflation is 8%. You don't expect policy rate to be that high. When policy rate is 21.5, means that lending rate will also be high, exactly. which is there. So we've also seen some stability in the foreign exchange market. We've seen the cedi appreciating. It's been stable over a period of time. For us, it's very important. It helps us to predict and budget very well for the future. On that score, I think that we've done extremely well. But the issues has to do with the other cost of production, which we are expecting that at least the budget will find a way to make the businesses a bit, give us some relief in trying to do our work in creating jobs, in producing whatever we do. I made mention of the lending rate. It's very high. If you are borrowing at close to 30%, obviously you will not be competitive when your competitors are doing less than 15%, those around others are doing even less than 10%. So we are looking at how this fiscal policy will also work with the monetary policy to ensure that we have the policy rate coming down to a level that will make lending rate also come down. The bit also has to do with the cost of utilities. For us, for any economy that would want to move forward, that would want to expand, that would want to change the structure from that one that largely depends on importation to production, your cost of utility, more specifically electricity, is very important. So when you see inflation coming down and you see exchange rate also being stable, you expect that your cost of utility will come down. And of course, businesses will take advantage of it. Because if you look at electricity, I mean, the way it's computed in Ghana, the key things they consider are inflation, exchange rate, and the crude. Crude on international market is very low. It's about 60-something dollars. So if you put all together, I don't expect that our cost of utility will be that high. At the moment, the cost per kilowatt hour for a manufacturing company in Ghana is over 12 cents. Whilst those in China and other regions are doing less than 5 cents, you cannot produce under these circumstances and ensure that your businesses are competitive. That is why people can import goods into our country and sell it at a price lower than what we are producing in here. So they import, they pay all the duties at the port, all the freight, all the transportation, and they still could sell it at a price lower than us. It means your cost of production is very high. Yeah. So if you really want to move forward, now we have stabilized. And for any economy that want to progress, stability is key, which we have realized, even though we are still vulnerable to external shocks, because the kind of stability we are enjoying, any external shock can derail all this stability, which we will talk about that. The next level is how do we grow? How do we ensure that this stability translates into economic development for an ordinary Ghanaian? How would this stability create jobs? How would this stability reduce poverty? That is what we are looking at. And that is where businesses come in. When you stabilize and you want to move, the next level is you have to empower businesses. Ensure that businesses can produce efficiently and profitably, and they expand and employ people. Government cannot employ the people that we have. Government just employ about 6%. The rest is being employed by the private sector. And the private sector can only do that when they are either starting a new project or they are expanding on existing projects. And that is where the environment also comes in. So stability is key, but growth that is broad-based, growth that is not coming from only one sector is what we need. If you look at the GDP growth for this quarter, for the first quarter, we had a GDP growth of 5.3. Second quarter, we had 6.3. Go and check the component of the growth and where the growth are coming from. If your growth is coming from an enclave industry like the oil and other things, you don't create enough employment for your people. But it's coming from the industrial sector, coming from the manufacturing sector. That is where you create a lot of jobs. That is where you can also produce for your local consumption and export and get the revenue that we need to be able to show up our currency. Now we are enjoying stability is largely because on the external market, the raw material, the commodities that we export are doing very well. So we have reserves. Yeah. Cocoa prices are going up. Good prices are going up. So we are enjoying. Let's look at the case where, and these things, they happen day in, day out. A case where there is a reverse, where cocoa prices are coming down and good prices are also coming down. And crude oil prices are going up. That is where you realize that the economy is vulnerable. The economy is not robust. It's not resilient enough to withstand this pressure. So for us to do that, we need to empower the private sector. So we are looking at a budget that is transformative enough, a budget that will make the private sector robust, to produce at least things that we need, that we don't have to export from other countries as well. So it shouldn't be just any budget that we've been reading. At least once we had a stability, we should move from the other way. The other bit, I think he made mention of the tax. For us, it's one issue that we have raised for the past 5 years. If you have a VAT like what we have now, you don't expect that businesses will be competitive. A VAT that will combine standard VAT with a straight line levy, which means that a straight line levy has a cascading effect. It translates into a direct cost to businesses and also to consumers, because you cannot claim input VAT on that. So once you pay, you need to transfer to consumers. That is why you see, I say inflation is coming down. Why is it that prices are going up? But if you look at the producer price index, it has come down. That is what measures how much producers are giving the product to those who are distributing. They add transportation costs, they add all the taxes. That is why you see prices going up. So I'm happy that they are going to reform the VAT system. But I'm also looking at the rate at which they are going to put it. If you look at Africa, the effective VAT rate is between 15 to 17% across board. We are doing 22 now. So if they are transforming or reforming the VAT, after everything, I expect that at least we get very close to the continental average of 17%. Anything above that will not help us.
Okay. I've heard people say how to make producers, local producers, competitive is to ensure that importers are paying more at the ports. Is this something that you think, yes, is the way to go?
No, that is not necessarily the way to go.
Okay.
The way to go is to make your businesses competitive. Right. You're an economy, now it's an open economy that people can always import. But if they are bringing in goods that your local product is more competitive than them, then people, and it's of high quality.
But how do you do that? You say cost of production.
Yes, so that's why we are calling that they help to reduce the cost of production.
Power.
Power is.
But you remember the utility companies are asking for what? Is it 200 and 100 and something % increase in the tariffs?
It gives me sleepless nights when they are asking for these tariffs, when already our cost of utility is very high. As I said, it's 12 cents per kilowatt. Yes. Add 200% to it. And how do you expect your business to be competitive? And all the factors that we are looking at for in computing that thing are all in our favor. So why would you want to increase utility tariffs by 200%? Now, much of the increment is also out of the fact that, I mean, go and see people tapping electricity, wastage, and all those things. They all are passed on to consumers. We should check how efficient these utility providers are. How efficient are they?
Okay.
Then we can look at it.
Let me bring in the traders because they are more into importing. So when the local guys are fighting for something, importers are also. So for traders, what's your biggest expectation of this budget?
I think my brother have said it all. And then, when you talk about even the utilities, how can you pass on your inefficiency to consumers? Production loss. Because most of the time when they come out, the reason is they have a production loss. And you are passing on that production loss to consumers. That's why we have a challenge. We're looking forward for a budget that is business friendly. And when I say business friendly, I'm talking about a budget that we're not looking forward to any added tax to the already tax that we have. And then, recently government launched this modified taxation, where we're looking for where we're going to get a lot of people into a tax net. And they have lifted the threshold to about 500. So those below 500 are all going to fall under the modified taxation, which I think is a welcome news for the businesses. Because one of our challenge was there's cascading effects of calculating this input-output VAT. And then if government is going to take away the 3%, we say fine, then this tax modification is coming to replace this cascading effect of taxes. We're looking forward for that one too. But, we're looking forward for a budget that is business friendly, because cost of production in this country is extremely high. And that is why, the complementary role we play as businesses, because our manufacturers and producers cannot meet demand, we go out there to go and look for the shortfalls. And by doing so, we find after paying duties and everything, it's still cheaper than that which is produced here. And we always have a challenge of our manufacturers. So what can we do? What can government do to make sure manufacturers and industry get cheaper credit? One of our challenge is credit. Well, you can't go and borrow at a rate of 30%, where our neighboring countries are borrowing at 15%, 10%, and be competitive. So a product that is produced in Ghana here, that will cost about 15 cedis, can be produced in even our neighboring countries, that will cost about 10 cedis. And after buying it from that place and paying duty, it gets to about 12 cedis. Still, it's cheaper than that which is produced here. So what can government, deliberate policy that government can put in place that anyone who is going to manufacturing, when going into industry, can get a cheaper credit? Because most times, policy rate comes down, but we don't see the effect on interest rate. As we're talking now, inflation is about 8%. Policy rates are around 21%. But interest rate is hovering around 30 to 35%.
Is that something you want the budget to address?
Exactly so. What can we do to bring interest rate down from the commercial banks? That's one of the challenge of the business community. Even we importers, that is our challenge. So what can we do to get interest rate cheaper, get cheaper interest rates from our commercial banks to trade with? And what can we also do to support our industry? Those products that have competitive advantage, what can government do to support those areas? so that we don't import those items. So we look at some few commodities that we think we have competitive advantage here. When I talk of competitive advantage, we have raw materials, and then we can support it, because they can't go to bank to go and borrow at 30% and maximize profit, and even compete with other neighboring countries. Yeah, for example, let's talk about iron ore. Let's talk about ore. The raw material price is the same. If it's $3, it's $3 worldwide. But someone in China is going to borrow from the bank at the rate of 3%. And someone in Ghana is going to borrow at the rate of 30%. Can it be competitive? So you go to China. A friend was producing nails, the one roofing nails. Here, he employed about 120 Ghanaians. He was producing nails. After 1 year, he folded up. Because it's even cheaper to import from China than to produce here, because of cost of production alone. So almost 120 people has been gone out of business, out of trade, out of employment. Yeah. So these are some of the challenges we find ourselves as a business community. So we're looking for what can government do. Recently, government appreciate that. So he came out with a policy that is going to form women's banking. What was the purpose? To have cheaper credit for our women to trade with. Yes, and as of now, we've not heard anything about that. So we want to hear something about it in this budget. What are the processes they've put in place? When is it going to kickstart? So that our mothers and sisters who are into trading and businesses, because they will go to the factory to go and buy. They go to microfinances and go and borrow at 10% per month. So per annum, 120%. How can you stay in business, go and borrow at per annum 120%? Our mothers, so they are magicians in the market space. They go to this microfinance, go and borrow 10% per month. So if government is going to come out with this policy to make sure that our women in trade, our women in business can get cheaper credit, otherwise, the purpose of this 24-hour economy will be defeated. Because you can't go and borrow to 25%, at 30%, and even have this 24-hour economy. We were doing some analysis, and even somebody was saying that even for this 24-hour economy to take off, you need a credit facility of about 5%. If we want to go into industry, we are serious to go.
But can it ever happen? 5% interest rate
yes,
in Ghana?
Yes, because otherwise production will still suffer. Because look, he mentioned about utilities. Already utilities is suffering, And so if you add on to this credit that will go for the banks to go and borrow, but you can come up with a deliberate policy as a government that anyone who is going to manufacturing, anyone who's going to industry, we have some credit facility for you, a cheaper credit facility, so that you can be competitive to our neighboring countries or other competitors in the world. These are some of the areas we're looking forward for. What is government going to do deliberately to support industry? Because what is the point, my brother, that I will travel from here to Japan over 3 days to go and import and bring it to the country, if I can get those products here? If even at the same price, I would prefer to say, because sitting in air for about 3 days is not an easy thing. So these are some of the things we're looking forward for. What can we do to support industry? So that distributors can have some respite than rather going out there. So that we can also do export. We go out there to look for market for our manufacturers. These are some of the things we expect government to look for. And then with the tax regime, that is killing businesses. Now, the last time we said they're going to rationalize our tax regime, which we say is a welcome news that we need. Because when the finance minister came, all his idea, his attention was compliance. But there cannot be compliance when your tax position is that high. Cumulatively, when you go to port to clear your goods, you are paying about 55% tax. So just imagine you import a goods worth about $100,000. You are paying about $55,000 as a duty component. Unless you are a magician. So people pretend to be paying and government pretend to be receiving. These are some of the challenges we have. So if you want to have a tax compliance app, then make sure that your tax rate in the country becomes low. Because our tax rate is extremely high in this country. 22%. It's on the higher side. You go and buy just a food from a restaurant, and you look at the tax component on it alone, my brother, you'll be surprised.
You won't come back again.
You won't go back there. Because the tax component alone is about 22%, 21 to 22%. Just on a food that you bought about maybe 150 Ghana cedis. You'll be surprised to pay about 40-something Ghana cedis.
Okay. Yes. Listening to, the traders, the industry people, access to cheap credit or affordable credit, I have to say so. But how does the budget address that? Because I know that it is for the individual banks to use some formula to arrive at that, right? Prof, help us. How do we get that? Because we all need affordable credit to do business. How should this budget address it?
Yeah. Bless, let me say good morning to my colleagues and your viewers as well. If you look at the entire budget itself, we come back to your question, how would the budget address access to credit? If you look at the entire budget, what is all about budget? It is about revenue and your expenditure stream. What I don't expect in this budget is to have a balanced budget or a surplus budget, which it will be difficult to get there, where your revenue, your expenditure will meet. It's difficult. So obviously we have a deficit budget. Let's look at the component of this entire economy that we have. It's structured into 4 pillars, the entire economy. We have the fiscal policy side, we have the monetary policy side, we have the external development side, and then we have the real sector development side. So your question that you asked will fit into one of the angles.
Okay.
And that sits into your monetary policy side.
Okay.
For the monetary policy side, we are looking at basically the gross international reserves, the interest rates, and then the exchange rate as well. These are the 3 pillars that you can find under the monetary side. But before we address that, you look at the fiscal side, and that fiscal side talks about the revenue, talks about your expenditure, and that talks about your loans and your grants as well. In this country, we've had challenges in terms of revenue and grants as against our expenditure. Per the figures we've seen in the summary of economic research, finance policy by BOG last September, and that's, we can issue a disclaimer, our figures will be tied to the September figures. We've seen 8.3% of GDP in terms of revenue and grants as a country. Back in 2024, we stood at 16%. What this figure means is that anytime you produce as a country of maybe 100 million, you're able to get 8.3 million in terms of revenue.
Okay.
Which means that we are very low in terms of revenue mobilization as a country.
So we produce, like, say, 100 million?
Yeah, in terms of GDP, I compare that to GDP.
Yeah.
So the total output of a country, if, for instance, it's about 100 billion or so, the government is able to get revenue in terms of 8.3 million out of 100. Meaning that revenue stream to this country is very low. It moved from 7 to 8. It means we have seen an improvement. But that improvement came through taxation and more on indirect taxes. What it means is that the country is overstretched in terms of taxes. We overstretch because everybody will have to be living in terms of paying taxes. There's nothing wrong. But the budget must address, apart from the access to credit, which we'll talk about, should address these concerns. If you overstretch people in terms of taxes, they'll find other avenues of avoiding. They'll run away from. What can the government do this time around to address that challenge and say, let me have revenue diversification into property? Well, how much are we getting? Petroleum receipt, how much are we getting? Extraction royalties, how much are we getting? And then if you look at digital economic taxation, now businesses are moved on to on the internet. Jerry, how much are they collecting from that area? It is difficult. So if I want to see anything in the budget, that's one area in terms of revenue. Because if you're able to address your revenue challenges, you won't have a problem in supporting your budget and find a way to cut your expenditure. But the other thing I have seen is that the government must be able to broaden the tax base. That's the only thing the government can do. I don't expect the government
This is something we've said. Yeah. Every year we say broaden the tax base. That we never get there.
We will never get there, but the point is that it's a deliberate effort of administration. And I said, one area, people have moved their businesses into, they don't set up
online
shops anymore. They are online. What can Jerry do? It's not my business. We will tell you what the issues are and find a way to address them because we vote for you. We are here to critique, give you idea. If you don't implement, who will implement? Back to your question, in terms of access to credit, how can this budget address this? And before we even answer, have a entire picture of where we stand as an economy. Where are we today? We have seen improvement, but the economy is fragile. Improvement, but economy. Improvement in each area. Stabilization, microeconomic stabilization. That's what we have seen. But we also seen growth quality, and that's what my brother talked about. Growth quality. Where a country stands on one leg, service, in terms of growth. Agric is off. Industrialization is off. CAPEX, capital, investment in capital, development is off. So about 3 areas will have to be addressed. If we want to help businesses, the government must be able to, because the private sector credit being constrained, we have a problem. How do you address that? But businesses, Bank of Ghana came out with the
MPC.
The rate formula to help guide rates that we give to the business community. Very laudable idea. And if you look at the math, the calculations, they factor a lot of things into that computation. When a government is always in the market, borrowing, domestic market, mobilization, what do you think the businesses?
Crowded out.
You crowd out. Business will not have access to credit. If you have the rate even lowered, and will say have government actively involved in the market, you crowd out. So what can the government do to take off its hands in the business? So I think the budget should be able to address access to affordable credit. What it means is that banks do not exist to collapse business. No, they are there to support businesses. Where do the business community will get funding from? They'll get it from the same bank. So if we have a whole government who steps and gets into the domestic market, borrowing with other businesses, they won't have credit.
So are you saying that when government draws away from the domestic market, it would automatically bring the rates down? Or you're just saying that then they should make, when they get out, the funds will be available for the private sector man to borrow?
It is difficult for government to say, I'm getting out of domestic borrowing, because there are certain short-term needs of this administration that the person must, the government should be able to get money funding to take care of some salaries and a few temporary expenses, fine. But the competition must not be between the government and then the private sectors in the same market. Okay,
I get it, but I want to find out how government can address the issue of low credit, because as I sit here, I'm also looking for the credit to come down, the interest rate to come down, so we can borrow to do other things. So I'm looking forward to the budget to say that, okay, we want the interest rate to come, but how does the budget do that?
Well, what is the credit today?
They mentioned 34. It's been a long time.
Yeah, 30.
Anyway. So 30
to 35%. Cumulatively.
That's on the high side.
Added on cumulatively. It's 30 to 35.
30 to 35. Yes. Such a situation difficult for business to thrive. Okay. So if we have a government who is not actively involved in the domestic borrowing, you have a buffer for businesses to have access to. I have not seen the ratio in terms of that. So in this budget, the government must have other means of generating funds from other sources rather than actively involved in the domestic market, borrowing from at the same rate.
Okay.
That's what I want to see.
Okay.
But in terms of,
just to add to what the question you asked, you know, it got to a point where banks prefer to give money
to government
because the TB rate was 20-something%. So if I'm a bank, knowing that government is risk-free, I can just give it to the government, get my 20, go and sleep. At the end of the year, I'll get 28%. Viewing the business community as highly risk, banks will not give the money to them. So if government is competing with businesses, a rational bank will prefer to give the money and starve the real sector of the needed funds. You realize that when T-bills started coming down, government is not able to meet people are not buying the TV rate as it's supposed to be. It means that they are looking for alternative source of investing. That is where businesses come in. So if I have money and I can have an alternative, which will a bit less riskier, I'll get my money and also get other sources like getting profit from it. I'll prefer to do that than to give to the government. So when they came, it was a strategy just to make sure that the government is also not competing excessively with the private sector when it comes to funding. That is why they consistently reduce the. But if you don't have the money to do your daily activities, if government is not generating enough revenue, the government will have no option than to go to the banks and still ask for the money from the people. So if you take a budget, for instance, it's on the fiscal side, usually you won't see a lot of activities or a lot of policies that will drive down the interest rate because it's the monetary. But in an economy where the fiscal side is working very well with the monetary side, there is no fiscal dominance where just as we've had, there were fiscal dominance where the government was spending and the monetary policy was virtually nothing. So you could see policy rates going up to as high as 30%, but inflation was 54%. It means that there was something fundamentally wrong. I have seen the complementarity role between the fiscal and the monetary policy. That's why you've seen some of these key policies coming down. I want to see it being strengthened and not government spending anyhow, increasing inflation. When you increase policy rate, in fact, you increase policy rate, the inflation targeting approach is that it will take you almost 2 years for it to reflect on your interest rate. Take you 2 years for it to reflect policy on your inflation. So the ones we have done, Ghana, we are doing about 3/4, which is very fine. But theoretically, that is what it means. So necessary increasing the policy rate will not control inflation. If you have a high cost of production, that is where you see inflation going down. So the two should work together in driving the economy.
So are we saying that the interest rate, whether it is coming down or going up, depends on the monetary policy that we have?
It's a combination.
Yes. Okay. So, but if that is it, we've had consistent reduction. But the rate at which you borrow has not come down. How do we get it?
It was 28%. Now it's 21.5%, and it's among the highest in the whole world.
Okay. That's a policy rate.
That's the policy rate.
Yes.
It's among the highest in the whole. If you have your policy rate, is the minimum with the rate at which let's in the simplified form, the central bank will give
lend to the commercial banks. Yes.
The commercial bank will also now come add their electricity, add their labor cost, add all these things. But they type and ask your risk profile.
Yeah.
They see businesses as very risky. They don't see them as partners of development. So you see a risk profile between 1 to 5%, and they'll give you the maximum risk of 5%. If you make the interest rate very high, what a business will do is that he's looking for an investment that will give him a revenue higher than what he's paying for the interest. And those investments are very risky. So they will go there, enter that investment, and that business will collapse. And they won't pay you. So your non-performing loans will be going up. And then you transfer these non-performing loans on your interest rate. You are rather compounding the problem than solving the problem. So it's a more complex, managing an economy is more complex than we think. It's not like
managing your small business.
If you're managing your small business, it's very complex. It's also complex.
Well, but the economy has a conglomerate of small businesses that you need to manage. And that's why it probably is higher. But Mr. Abuaje, even though the banks will add on, but when the policy rate has moved from 28 to 21, have you seen a reduction in the rate?
There's been some minimal. I've seen
reduction in the lending rate.
In the lending rate, yes. Some have dropped to about 29.
Yes, for personal loans, I've seen some doing 15%.
Okay, 15.
Yeah. Oh yes.
But you see, when the government creates a nimble environment for businesses to thrive, no bank will tie their resources and give to the government because the rate is very low. But when you invest into the high stream or returns in that other businesses, the bank will do well. So we are saying that, it is important, create an nimble environment. For instance, we are talking about PPP arrangements. A government has a project of 1,000 cities to execute. And says that out of the 1,000, I have 500. So I won't go to bank to borrow. So you leave the bank space to the private sector. Rather join the PPA. And say, partner with me, provide the extra 500. Let's make 1,000. You avoid that space. Allow the businesses to have access to.
I think they're doing that with railway. When
Yeah.
I spoke to the transport minister, he mentioned
No,
that
but in terms of
one of the strategy they want to use is
the
to use
PPE arrangement.
PPE arrangement to ensure that a lot of the lines are constructed.
next year, we're going to pay a lot in terms of interest on our debt.
Okay.
Those institutions, the Bretton Woods institutions that we had agreement, repayment will start from next year or 2026.
Even the debt restructuring.
Yeah.
So what it means that if we don't take care of our revenue mobilization stream, it will be a challenge.
Yeah.
But I would want to go and bring in my man from KPMG. But you mentioned something about if we don't take care of our revenue stream. How then, when I come back to you, how can government close the 2.5 billion gap that we understand will be created when the COVID levy is taking off? So when I come back to you, I want you to tackle that for me. But let me go on to Zoom now and bring in Amos Osei Wusuansa. He is Associate Director KPMG, EDAS, that's the International Development Advisory. Grateful to you, Amos, for joining us here. Now, Mr. Mark Beduabwaji earlier made mention of the fact that even though we are recovering, but the economy is still fragile, and it's we need to find ways of avoiding external shocks. How can we do that? How can this budget address that we can withstand external shocks when they come?
Thank you very much, and thanks for inviting KPMG to this conversation.
Okay.
I have been listening with a keen interest. So even before I come to answering your question on external shocks, I think the conversation I am hearing from the studio, the panelists in the studio, actually also reflects the sentiments that businesses have expressed when we did our pre-budget survey. So the pre-budget survey clearly, businesses have shown that yes, confidence is improving, or it has improved because of the 2025 budget, the measures that were initiated, and we have seen fiscal discipline and of course the macroeconomic environment are then asking for, according to is for now that macro stability we have witnessed to also transform into tangible results or economic transformation that they can feel, because at the moment that macroeconomic stability doesn't seem to be impacting their business growth. That is what they are telling us. Okay. And one of the key issues they are mentioning, obviously, with the access to credit and making sure that the interest rate, there is a cheaper source of funds and they have low interest rates that they are paying. It's one thing that has come through also in the survey. Now, how do we do that? You kept asking, how do we do that? So when banks are obviously charging interest rates, there are components they are looking at. So the funds that they are getting to on-lend, at what cost are they getting those funds? And also the risk premium that they are factoring in, that if they compare businesses, as other panelists have said, if they compare businesses to government, government is seen as risk-free, whereas businesses may be seen as more risky. So they will put a risk premium on that. So how can the budget address it? There are, two ways that the budget can actually address this. One way is to say, okay, in terms of the funds that banks are lending, government can make available a pot of fund to say, for this amount of money I am giving to you, the banks, on lend to businesses at a lower rate than you would usually do. So that is one way. The other way is if we are looking at the risk, then the government can also say, I am guaranteeing the loans that you are making to a certain category of businesses. So if banks know that the loans that they are awarding or granting to businesses is being guaranteed, then of course that also minimizes the premium, the risk premium that they are putting on these loans. And when again we look at the pre-budget survey, these are some of the key things that businesses are also asking this budget to do. Now to your question of managing shocks, it's where would the shocks come from? The shocks obviously will be based on the fact that when the business we are doing with the external world, our businesses or the business we are doing with the external world, we tend to be exporting raw materials mostly. And we are not really adding value to the things that we are exporting. So we need to create that enabling environment that allows domestic businesses to add value to our raw materials and to be able to export those raw materials, but to also make sure that we are relying less on imports. And again, that will be dependent on creating the enabling environment for private sector businesses to thrive.
Okay. All right. I get the point you're making, that government should encourage more of value addition in the country than exporting raw materials in order to help us prevent, shocks. I'm grateful to you, sir, for joining us here. Prof, because of time, maybe wrap it for me and then we can go. I wanted you to wrap up on the point of how government can close the 2.5 revenue gap that the COVID levy will be leaving, because you say that we need to bridge the gap that we'll be having.
Yeah, I think one area that we have not, as a country, looked at, when the price of gold went up, the extractive royalties paid to the government, did it change? No, we're paying the same. It is time for a country to look at that area. So when there's an upset or when there's a swing, there should be a way of computing that royalties.
Then when it comes down to you pay for it, you bear the...
We do that, yes.
Okay.
But now I don't know the law on that, because for the past 2-3 months, we've seen a surge of gold prices. What is happening to that royalties? We don't know. So an area we have to look at is key. Rationalization of state enterprises. Check the performance of these state enterprises over a period of time. We have not seen any. What are they doing? We spend so much money on these state agencies, the STCs, the companies that we have. It is time for us to look at that area.
Last week, Honorable Joe Gatti, former Minister for Railway Development, was making the argument that why would GIHOG be running at a loss when Casapreco is making profit? So probably you need to look at some assets that the state might not necessarily be an expert in, leave it for the private sector to operate.
That's another area. So we have to champion that as a way of not focus on the traditional stream of revenue mobilization, but other peripherals, one that we don't even consider, must also be looked at. Then the PPP infrastructure should be strengthened if we have to get more revenue to help the state. These are the 3 or 4 areas that I think for this year, the budget. And then the last thing is on the various flagship programs of this administration. We have not seen any. The Ajumara that was paraded.
They are launching in Kokonketinketi today.
Yeah. Well, check the Ajumara. What is happening? 24-hour economy. What is happening? These are major projects that we think, when they are implemented, will change the status quo.
But the private sector will have to play into it. They've launched a policy.
But who is the owner of the policy? Why is that policy not implemented?
Okay.
Yeah.
Okay. All right, Mr. Badi.
Yes.
Concrete remarks.
Yeah.
I mean, at the end of the day,
yes.
What to make you smile?
Yeah, at the end of the day, I think so far so good. We've seen some physical discipline from the government side,
Okay.
which we say is a welcome news. And then these gains that we've gotten, what the question we're asking is, how can government sustain these gains? Sustainability of the gains is critical to us. It's very, very important because there's a school of thought that's perceived that these gains are artificial and it cannot be sustained because Bank of Ghana is injecting some monies into the system. So whatever the government did right, that we had this gain, what can we do to sustain it? These are some of the questions the business community is asking. That if you're able to do this, sustain these gains, then as a business community, we can do projections. Because if you're a businessman, you can't do projection. You don't know, you can't do a projection because the fear factor is that tomorrow morning you wake up, exchange rate has changed. You don't know that is why there's always pressure on our foreign exchange.
Okay.
But if government can sustain these gains, the business community will be very grateful. Because surprisingly, a car that we clear maybe about 15,000 now has dropped to about 10,000. You have made some savings for about 5,000. Okay. So let's sustain these gains. These are some of the things we're looking for.
All right. Let's see how the budget will help us sustain the gains we are making when it is presented in Parliament tomorrow. Remember, the time we're being told by the Speaker is going to be at 2 p.m. when the budget is presented. Thank you very much to my guest. Joseph Paddy is Director, Industrial Relations, Ghana Union of Traders Association, GUTA. Professor Isaac Bodi is Dean, Accounting and Finance, UPSA. Dr. Mark Bedu Abuaje is Chief Executive, Chamber of Commerce. And Amos Osei Wusu-Ansa is Associate Director, KPMG, EDAS, International Development Advisory. And to you, our guests, for doing the watching. We'll take a break here. We'll come back with a lot more on the AM show. Please do stay.